How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, where this is a channel dedicated to all things investing as well as my very own personal journey to amassing $100,000 within my Vanguard brokerage account. Now, as of today, that account is sitting at $72,672.24. Believe it or not, it is actually down about $368 after Federal Reserve officials came out and had announced that they were going to be dialing back on asset purchases, which of course spooked the market entirely, had a ton of investors worried and concerned about inflation. But every single dip creates an incredible opportunity for investors like you and I to go ahead and get invested in buying those stocks on sale. Now that brings me all the way to today's video, in which it's going to be about the 3 dividend aristocrats that are about to turn into Dividend Kings. So those are dividend stocks that have been paying out 50 consecutive years worth of dividends and increasing those dividends while they're at it. So certainly investments you can get invested in today, hold out for the long run and make out very well. A video you will not want to miss out on. But of course, just before we actually get started today, go ahead, tap on that thumbs up button, as it greatly helps me out in growing the Blue Lion Finance channel and getting the word out there. But moreover, if you personally have not already subscribed, go ahead, tap on that subscribe button for me while you're at it. Not to mention, I would love to have you partake in that giveaway we have underway as we speak, in which I'm going to be sending one lucky winner a $50 One Hope Wines gift card. The main rule of thumb here is you just have to be a subscriber to the Blue Lion Finance channel. Now YouTube, with all of that being said, let's get right to it. So just before we actually dive into those 3 dividend aristocrats, I want to have you know that each of these 3 dividend aristocrats have already been paying out dividends for 49 consecutive years while increasing those dividends, meaning they have less than 1 year until they officially make it onto that elite list of Dividend Kings. So without further ado, let's get started with our first dividend aristocrat, that being Grainger, ticker symbol GWW. Now, Grainger is an American Fortune 500 industrial supplier, supplying maintenance, repair, and operating products like hard hats, light bulbs, hose lines, trash cans, mop heads, motors, you name it, they probably sell it across industry verticals. Now, what I love most about Grainger is its rich history, as it was founded back in 1927 and has since then done an outstanding job in growing its customer base, where it now sits at 3.5 million customers on a global scale. They have done an incredible job expanding well outside the United States, operating in Europe, Asia, Latin America, Canada, and of course have only continued to do an incredible job growing their customer base here at home in the United States. Now, in taking a look at Grainger's stock, we can see here that while yes, they were certainly impacted at the upfront in 2020, they have recovered very well, and I would argue that 2020 and the pandemic actually helped Grainger more than it actually hurt the company. But moreover, if we continue to zoom out and take a look at that stock over time, we can see that it has literally had an upward trajectory since its founding back in 1927, which makes me an incredibly confident investor when it comes to Grainger and getting invested in it for the long run. And as of now, of course, that stock share price is sitting at $455 a share, which, while some of you may actually argue is incredibly expensive, I would counter argue in saying that $455 over a long span of time is chump change, especially when taking into account that investing with Grainger means you're investing in a solid dividend player paying out a dividend at a dividend yield of 1.42%. Coming up on the second dividend aristocrat of the day, we have Leggett & Platt, that's ticker symbol LEG or LEG. Now, Leggett & Platt is a manufacturer of furniture and other engineered products, specifically for homes, offices, automobile, and aircraft. In more recent news, Leggett & Platt has recently been added to the Dividend Channel Safe 25 list, which signifies that it is a dividend stock with a well above average dividend rank. Now, Leggett & Platt's market cap is sitting at $6.77 billion. So again, another strong market cap. But in taking a look at Leggett & Platt's stock, we can see here, well, yes, they were certainly hit pretty hard during 2020. They have made a smooth recovery and are currently now trading once again for those pre-pandemic levels of around $49 to $52 per share, which is exactly what I want to see in a company that I'm looking to invest in, that regardless of the state of the economy, they are going to pull through. Now, as a dividend investor, what makes me incredibly excited about investing in a company like Leggett & Platt is that dividend yield, which is currently sitting at 3.3%, which is right in the sweet spot of a safe and secure dividend yield. And last but not least, coming in at our third Dividend Aristocrat of the day, about to turn into a Dividend King, we have good old Target. That's ticker symbol TGT. Now, I am absolutely confident that Target does not need any sort of detailed introduction, but I will share with you, investor to investor, that Target has become the 8th largest retailer within the United States, making quite the name for itself and honestly gunning to become competitive with Amazon. Now, Target's current market cap is sitting at $124.79 billion, and just in 2020 alone, Target brought in a whopping $15 billion worth of revenue. Now, that is absolutely insane to think about the amount of revenue Target has brought in 1 year, considering the fact that that is more revenue than they have brought in the 11 previous years combined. However, what I love most is learning that Target is not slowing down anytime soon. A matter of fact, just this year, entering 2021, they have announced that they are going to be spending $4 billion to continue to make improvements with their delivery and pickup services, store remodels, and most importantly, improving upon their already incredible customer experience. And while Target has certainly surged over 2020, growing its stock share price to upwards of $250 per share, some may say that is quite expensive, but I would personally argue as Target continues to digitize, they are only going to continue to grow at an exponential rate over time, becoming competitive with Amazon and of course outbeating most of their competitors like Walmart. Now, with that being said, investing in Target is not just investing in a high growth stock opportunity, but of course a dividend stock. So you're going to reap the rewards of those dividends with their current dividend yield sitting at 1.09%. And that is it. Those are the 3 Dividend Aristocrats that are about to join the elite list of Dividend Kings, paying out over 50 consecutive years of dividends while increasing those dividends. So all investments that you can simply just get invested into today, hold on to for the long haul and expect a solid return on your investment. Now, if you've liked what you heard, you learned something new, go ahead, tap on that thumbs up button as it greatly helps me out in growing the Blue Lion Finance channel. I would absolutely love to know your thoughts. Make sure you leave comments below. But most importantly, if you personally have not already subscribed to the Blue Lion Finance channel, go ahead, tap on that subscribe button for me. Not only would I personally love to have you along the journey with me, but I want you all to take advantage of that $50 One Hope Wines giveaway that we have underway right now. Now, YouTube, with all of that being said, I look forward to seeing you in the next video.